ForexDayBreak podcast, where we trade the Forex market with you. Entry, target, exit, and stop loss levels are covered when we walk you through every trade made in the show. 5% of Forex traders are profitable, and you can be among the winners. If you wish to find out profitable trade signals in the Forex market, ForexDayBreak is the show for you. Now, let's begin today's episode.
Good morning and welcome to episode 88. Forex pairs in this episode are Euro-USD. The larger downtrend has resumed and we are ready to trade this pair to the downside. Pound-dollar, we are expecting next larger move to be to the downside. A sell stop order has been issued and we are ready for the next move down. And Euro-Pound, same here. Sell stop order is in place and we are waiting for the next larger move to the downside to start. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Monday morning, and this week we have the FOMC meeting that will or will not determine the first rate increase in US for over 10 years. So quite an important and anticipated meeting is held Wednesday. This of course has a volatile effect on the markets, on Forex market, probably to equity markets around the world as well. And of course we are interested in the effect on the Forex market, and Euro-USD pair I think is the main victim or beneficial here. So let's take a look what we'll see in the charts if we can forecast the outcome of this meeting, very important meeting. So Euro-USD has started the Monday with a small decline. We have declined slightly from the highs of the Friday's market close. Price now 109.63. My preferred wave count is proposing more downside. I have labeled the minute wave 4 as completed. Yesterday I made my future trades video. I explained a little bit about the other scenario, that if we should get more upside, make a new high, and perhaps even enter into this first wave territory, which is this red line in my charts. This red line is at 110.87 approximately. So if we move beyond that level to the upside and start to make new highs, then we are dealing with a leading diagonal triangle pattern on this minor wave 1 position. And I have my Fibonacci expansion tool, which gives us 100% Fibonacci expansion level at 112.58. And these two levels, if we were to get more upside, these two levels, the trend line which connects the peaks of the second wave and the start of this trend at 117, and also the 100% Fibonacci expansion line, these would be acting as resistance and target for the upwards move. But I'm not expecting any moves to the upside. I'm not expecting this 110.87 level to be violated. I'm expecting more downside, and I'm expecting a positive outcome for the dollar out of this FOMC meeting. I'm not so sure if they're going to raise the interest rate, but they are still going to play this that it will be beneficial for the US dollar, in my opinion. If they're going to raise the interest rate, of course there's going to be a very, very big move to the downside, in my opinion. But of course this has been anticipated throughout the year of 2015. Remember that first estimates were at the start of this year or end of 2014. First estimates were that it should be April or March rate hike. Then it was sure it was going to be in June. Next, I think it was sure that it would be in September, and now of course they are absolutely sure it's going to be in December, so Wednesday. We'll just have to see what happens because nobody knows for sure. I think the Fed officials have already made up their mind if they are going to raise rates or not. I would incline more to the notion that they are not going to raise rates based on the market conditions, based on the data that has come out from the US for the past months, all except the payroll, NFP payroll numbers and unemployment numbers, all except that is very bad, below estimates all the time, and always, of course, unexpectedly below estimates. So very interesting to see what will be the narrative, what will be the decision if they are not going to raise rates, what is the explanation of this, and what will be the guidance and a statement that will keep markets believing that they are on top of things, that they know what they are doing. So let's see on Wednesday what will happen. But in my opinion, we have started the next decline in Euro USD. Let's draw it here once again. So from the high of this minute wave 4 near 110.4 level, we see now first waves 1 and 2. We can expect now a decline, wave 3 decline, and then five-wave structure out of this decline eventually. So I'm expecting more downside to come. Of course, if we get the rate hike on Wednesday, there will be a very large move to the downside, in my opinion. We have a trade set up here, so Euro USD sell stop at 109.285, stop loss 109.7, take profit 107. So these are the levels on this trade, sell stop, and we are waiting for a big move to the downside for wave 3 of this first 5-wave sequence of minute wave 5, which will then conclude this first larger 5-wave sequence of this new, even larger C-wave decline. Okay, let's move on to pound dollar. We have a trade also in pound dollar. Sell stop at 151.6, stop loss 152, take profit 150 flat. Those are the levels for this trade. And we are expecting also a decline in pound dollar. This pound dollar price structure is quite confusing. Let's actually see a little bit smaller. So now you can see the wedge-shaped formation which has been forming here for a couple of months. 158.18 was the previous long-term high, and after that we have been seeing a triangle-shaped pattern, quite a long overlapping decline, which now has more or less continued. We are now still between those trend lines. My wave labeling here is that we are forming a wave 3 to the downside, have just started. Of course, if this triangle shape holds, the trend lines act as resistance and support levels, we should maybe get more upside before a decline. But if there's correlation to other dollar pairs and on Euro USD, we should expect a decline out of this pair. We have a sell stop order waiting for that decline, and we can expect next larger move to be to the downside. Until we see a clear break from this triangle to the downside, I'm expecting so maybe a 149 level is the lower end of this, all over part of this trend line. So before we decline below 149, the wave structure and the labeling here is quite difficult to get right because we are in an overlapping decline and between the triangle trend lines. But a trade to the downside has been issued, and we are expecting a move lower in pound dollar. All right, next let's take a look at euro pound. Euro pound has been on a very tight range for the past few days. I am expecting a decline. I have a completed minor wave 2 on my charts, and next larger move should be to the downside. There is not clear impulsive structure to downside seen here yet, but the price structure is bearish in my opinion. So next larger move should be to the downside. But until we see a clear 5-wave sequence or clear impulsive structure in euro pound, then this wave structure is quite hard to figure out. We have a sell stop order here as well, so 0.7204 is the price, stop loss 0.7225, take profit 0.7150. So those are the levels. If we get a clear decline here, I would say right around this smaller support zone around 0.72, so a decline below that is first a sign of that starting decline and that bears are in control of this pair. The wave structure supports the view that we should see a decline next. We have a completed 5-wave structure from the high of 0.7492 and the low is 0.704. Then we have a complex sideways correction as minor wave 2, so ABC, you see here the 3-wave structure of this correction, and then the next move should be to the downside and a continuation for the larger downtrend. Okay, that's all for today. Visit the show notes at ForexDayBreak.com/88, and let me remind you that you can get this video analysis, daily trading signals, weekly future trades video, books and access to my trading system when you subscribe to my basic membership. Membership fee is only $10 a month, and I have a 14-day free trial for you to test out my service. You can cancel with one click, so this is truly a risk-free offer. Go to ForexDayBreak.com/basic and sign up today. More trades tomorrow, happy trading, and I will see you next time. Bye bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.ForexDayBreak.com. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.